A very good morning to all of you and a happy Vesak Day for people celebrating it. And here is your market update. A pretty choppy session on Wednesday. Investors continue to try to untangle the unemployment data that has come through and also the corporate earnings that have been coming through to understand where the economy might end up in the months ahead. The US stocks fell for the first day in 3 days, though tech shares fared better on bets that companies like Apple and Microsoft will thrive in a work from home world. Treasuries extended a global bond sell-off with the 10-year yields hitting the highest in almost 3 weeks. Dollar strengthened against every currency in the G10 basket except for the yen. Gold lost about 1%, and the Asian equity futures are pointing lower ahead of Japan returning from its Golden Week holiday. Sector performance wise, information technology and consumer discretionary were the positives. The drags on the performance in terms of sector was real estate, financials, energy, as well as utilities. So the 10-year closed at 0.70 and the 30-year closed at 1.39 in terms of the treasury yields itself. Now, oil futures fell below $24 a barrel in New York, snapping a run of gains that have seen the prices almost double over the last 5 days. Oil fell by about 2.3% as persistent supply glut overweighed the signs of a recovering US fuel demand. ADP data came through yesterday. Record print of 20.2 million was the job losses. It's really unprecedented, and they also revised the March estimate to 149,000 from the 27,000. Another 3 million Americans probably file for unemployment benefit. That data will be coming out later today. All of this will obviously lead up to the NFP data coming up tomorrow, which will be a big event in terms of data. China's trade data is also expected later today. We expect the China's exports to plunge in April, as you know, while they were almost on their path to restarting, it actually had the global economy actually fell off in terms of lockdown. So there might be an impact of that. So consensus is for a drop of about 11% from a year earlier compared to the March decline of 6.6%. Imports may slide by about 10%, and the trade surplus in terms of dollar might narrow by more than half to 8.68 billion. Their FX reserve data would also be coming up later today. In terms of equities, the GM reported profit. Their profit beat expectations on a 27% surge in pickup truck deliveries. The company plans to get its US and Canada operations running by the 18th of May. So that's a positive. The GM's trucks helped it to almost double in terms of EPS projections, and the revenue slipped, but they still beat consensus by almost 1 billion. Now, one important data that was presented was also the fact that they hold 33.4 billion in terms of cash, which will help them ride through the crisis itself. T-Mobile profit topped estimates. PayPal withdrew its full year guidance. Their adjusted profit also disappointed at 66 cents to a share, less than the 75-cent estimate. Prudential Financials as well as MetLife, came up with their numbers, which kind of gives a little bit of a sense of how the insurance industry is going to take this pandemic. Prudential Financial expect the coronavirus deaths to cut earnings by about 200 million this year, after it swung to a net loss in the first quarter. MetLife, on the other hand, first quarter profit exceeded estimates, and it forecasted a modest impact on underwriting margins because of the pandemic itself. So there was a mixed picture given by the insurance companies. KKR's PE portfolio fell by about 12% in the first quarter. Now, KKR recorded a net loss of about 4.2 billion in the first quarter as economic fallout from the pandemic cut its carried interest spot by half. Earnings that we'll be looking forward to is Budweiser, AB InBev, Bristol Myers, as well as Raytheon and Danaher are some of the companies that we'll be looking forward to. It's really been a somber earnings season, to say the least. Profits are down, and the general sense is that the worst is yet to come. So the S&P 500 earnings are on track to fall by about 14% compared to the first quarter of last year. This is according to FactSet. Now, this could be worse. This would be worse such decline since 2009. And remember that the pandemic shutdowns only began towards the end of the quarter. So analysts are expecting steeper declines in the second and third quarter. Second quarter declines by about 37% and third quarter by about 20%. Moving on to fixed income, the treasuries will boost long-term refunding debt sales next week to a record of about 96 billion. Now, they also announced that for the first time that they will issue 20-year bonds since the 1980s. So that will increase the maturities across the issuances that are going to happen. The Treasury has raised a net of about 1.46 trillion since the end of March. Market reaction was that on Wednesday the yields were pushed higher. The 10-year Treasury note was up about 8 basis points to 0.74 before it kind of settled down at 0.70. The spreads between, that is the 2-year and the 10-year spread, has been steepening as well. It's currently at about 52 basis points compared to the 20 basis points at the beginning of the year. A point on the 3-month LIBOR, the 3-month LIBOR rates dropped by about 2.6 basis points again to close at about 0.45, which is the 11th consecutive decline. Now, a point to note over there is that the Treasury said that they're ultimately looking to finance the borrowing through the long end of the curve, and hence you can see the increase in maturities and the issuances will be spread across longer maturities. But at the moment, they're going to need to sell a lot of bills, and the net issuances of that can reach about 3 trillion in the current quarter. Now, that will automatically provide some kind of a floor for the rates itself. That's what some of the analysts in the street are expecting. Lastly, in terms of the forex, what we'll be looking forward to is Bank of England's monetary policy announcement and the quarterly inflation report. In terms of the announcement, we don't see any major changes. We expect the interest rates to be left unchanged and the QE to remain unchanged itself. The focus will be on the quarterly inflation report. They might resort to kind of publishing forecasts on various scenarios of growth and inflation depending on the length of the lockdown itself, instead of giving hard numbers in terms of projections. Lastly, commodity currencies will be in focus, and we'll be looking for the Australian service sector PMI as well as the Canadian PMI numbers to come through. And we also have the China trade balance, which will have an impact on these currencies. That's your market update, and have a wonderful day.